what do you say that you like to copy your heroes? And Charlie Munger is definitely a hero of mine, but more so, with Benjamin Graham's 1934 book, Security Analysis. Really, I've just been copying that, for the last 20 or so years. Even to this day, I'm quite amazed that folks don't follow the value investing process. So there's more than one way to skin the cat in the investment world. But the value investing of buying 50-cent dollars just speaks to me. And I'm primarily a balance sheet analyst, reading balance sheets and trying to identify some of those 50-cent dollars and purchasing them when I can and selling them for $1 or more when Mr. Market is in a happy mood.
Well, I think you're being very humble there, because not all value investors have done as well as you have. And in fact, in 2008, the ACI partnership was up 10%. How did you accomplish that?
Primarily because of the value investing process wouldn't let me invest in anything. I couldn't find a whole lot of things to invest in back in really 2006 and 2007. So as we moved into 2008, I believe we were probably almost 40% in cash, just because we couldn't find the values or the 50-cent dollars. So we were primarily out of the market. We also held a fairly large investment in long-term bonds because we were somewhat of the belief, and probably even so today, that at least we're in a non-inflationary environment, more so than a deflationary environment, but at least non-inflationary environment. So we like long-term bonds, and as the flight to safety, that helped us do quite well in 2008. Well, the starting place for us is always the balance sheet. We usually have varying degrees of what the market is like, maybe 50 to 100 on-deck candidates, as you will, in the batter's box, and just wait for them to hit our prices. But with respect to the coiled spring, I use various analogies, whether it's a coiled spring or 50-cent dollar, time arbitrage. All of those themes involve of very cheap stocks, and eventually, if they don't go bankrupt, which a balance sheet will tend to allude to, they will always eventually revert to the mean, which means they'll get back to fair value, which is at least $1, and hopefully more than $1 going forward. So that's where the coiled spring, time arbitrage, or 50-cent dollar comes from.
And what are some types of companies you tend to get most excited about? Are there specific industries or types of business models that you like to find?
Well, as I mentioned earlier with Charlie Munger, I spend most of my time on the negative process, meaning, I'm eliminating things than adding things, really putting more things into the too hard pile. I absolutely wouldn't even get near biotech. I have rarely ever gone into mining just because I don't understand mining. So it's more putting things into the too hard pile and just concentrating on some things that you can understand, and just continually reading 10Qs and 10Ks, and which a lot of people don't like because it's quite boring sometimes. But for me, I enjoy it because it's kind of like a treasure hunt. Every day you don't know what you're going to find in that 10Q or 10K, and hopefully it's a 50-cent dollar. But the primary goal of the value investing is, rule number one, don't lose money, and rule number two is always remember rule number one. So make sure that there's something there on the balance sheet or management paper trail that says that this company's not going to go bankrupt. They just hit a pothole. They've hit a speed bump for whatever reason, a bad management decision that they can get out of, just a product mistake that time will take care of. I like the equity side because no matter what's happened in the company, you have people working for the company. You have people showing up every day, at least trying to do the right thing and trying to make the business better, cheaper, faster. So as an equity investor, you always have somebody that's going to work, for you. Unlike maybe a bond or a commodity, indirectly you do for bonds, but I just like the equity side because I have that potential added competitive advantage. At least people are showing up to work to do the right thing. So that's what I look at is balance sheets and trying to understand that the company's not going to go out of business, and playing the reversion to the mean. And if you get lucky every now and then, you can get a company that made a mistake and the balance sheet's good. And it's a growing company. Sometimes the market, as I said earlier, Mr. Market, sometimes he's happy and sometimes he's depressed and sometimes he just throws the baby out with the bathwater, and there's your opportunity.
Well, James, your fund actually has compounded at about 25% over the past 10 years, which is extremely impressive given what the market has done. And you've just talked about, stocks that sound like you're looking for the accident where you determine it's a temporary kind of thing, but I know you've also held some companies for a decade or longer and made a lot of money in those. So what would you say is your sweet spot in terms of ideas? Is it the long-term compounders, or is it the companies that get beaten up too much where you feel like they're not going bankrupt and there's a lot of money to be made just on the rebound that might happen?
I think the points that you made is probably a combination of all. We all react to the opportunities that we're presented with. I've been presented with, opportunities. You mentioned a gentleman named Prem Watsa. I just spoke with Prem Watsa a few weeks ago at the annual meeting, and about 10 years ago, I was in New York, and I met Prem Watson, and I thought he was an honest guy. I thought he was a straight shooter, and many folks in the investment community thought the exact opposite of this Canadian operator. The company got extremely punished in the market, some of it for good reasons, but majority of it for unfounded reasons. And so we made a fairly large position in that company, and it's done quite well for us. We've held that company for almost 12 years or so, going on our 13th year. So we're very comfortable with that situation. And depending on how the market is, we would add to it near the price that it is today.
Well, maybe we can talk a little bit about how you go about finding these kinds of ideas. You just mentioned you met Prem Watsa some time ago. Is that how the investment came your way? Do you run screens? Do you talk to other investors? What is kind of your idea generation process?
I guess my primary idea generator is the 52-week low. Those things that are out of fashion at the time. Obviously, over the years, you build up fellow investors that have similar taste as you do, and you communicate quite often, if not daily, on idea generation. But screens help, but primarily just the 52-week low, just reading constantly, and keeping things on the deck. I believe Warren Buffett had mentioned that he had read 35 years worth of annuals of Anheuser-Busch before he finally end up buying his first share of Anheuser-Busch. I've had similar stories where, I've read annual reports of 10 or 15 years or so before I ever invested in a specific company because, eventually they hit a pothole. But I knew the track record, I knew the management, I knew the paper trail, and felt very comfortable moving money and capital into those positions based on the research I had accumulated over the years. So primarily every day, you come into the office and just sit down and start researching and seeing what your fellow colleagues and peers are doing, and build that database up and just wait for the fat pitch. That's happened, in 2008, 2009, and 2010. The markets have continued to climb the wall of worry, as the adage goes. There's not as many values out there today, but if you look hard enough, there's a turnover enough rocks. There's some things out there. Anyway, hopefully that answers your question.